Hello, Safi Russell here, SDR Consulting Inc., coming to you on this Tax Tip Tuesday with a discussion about employee versus contractor. One thing that is important when you're looking to expand your practice, whether it be with another therapist or maybe an administrative staff, et cetera, or billing specialist, is to know that it's very important for labor law purposes and also for tax purposes to understand the differences between who qualifies as an employee and who qualifies as a contractor. I'm going to review some of the things that the IRS specifically may look at, but you also want to keep in mind that your state may have different rules and the Department of Labor may have different rules. So these are all things that are important. So just to go over some of the basics, an employee is someone that you have control over in terms of the hours they work, the location they perform their work from, and how they do their work. For example, instructions on each assignment, each patient that they're seeing, et cetera, the processes that they take their patients through, what platforms they utilize. Um, Employees are also usually paid on a, recurring regular schedule. They're set up in a payroll system. Maybe it's biweekly, weekly, monthly, hourly rate, or salary. And with employees, you as the business owner have to withhold taxes from their paycheck and remit that to the appropriate federal and state agencies. And then they also have a portion remitted as well. And then you may have unemployment insurance and workers' comp insurance requirements for that employee. So yes, an employee does come with some more expense on the business owner side, the practice owner side. Also, more compliance as far as a payroll service and that handles the payroll tax returns and the payroll tax withholdings. Someone has to run the payroll, et cetera. You want to make sure you have all your policies in place, such as handbooks and policies, procedures, employee agreements, et cetera. So definitely there's more involved with hiring an employee. So some people, feel like they can just opt into hiring a contractor instead. And it's really not a choice of which one is easier. That's not the way you want to make that decision. And a contractor is someone who is a self-employed individual or business owner. Could be a fellow practitioner who has their own PLLC or LLC or corporation. Um, the main thing is that you don't have control over the work they do, the hours they work, the way they perform their work. They are usually contracting themselves out to other, practitioners or agencies, et cetera. They are providing all of their own tools, uh, softwares, they're pretty much handling their operating costs. They're responsible for their work. And most importantly, they handle their own taxes and they don't receive any type of benefits or reimbursements. So if they have, if it's telehealth, whatever out-of-pocket costs they may have for their internet, et cetera, they cover that. If they're going to, client patient sites, the mileage, gas and stuff that they incur in their personal vehicle, they're responsible for that because they get to write that off. So yes, as a practice owner, a contractor is a little bit easier to hire because you just really need a W-9 from them to have on file, and you may have to issue a 1099 NEC to them, once the year is over if you pay them over $600. However, the challenge comes in where that person is primarily only working for your practice. They're pretty much working full time. They're working set hours. They're getting paid, a fixed amount on a recurring basis. If the IRS comes in and reclassifies that practice, partner or therapist as a employee, what'll happen is they will charge you and your practice the late tax payment and late penalties and interest on those payments. Um, and it can add up. So the withholding that you should have done on that person if they were an employee, that's pretty much what they're going to charge you on, charge you for, and also add penalties and interest to that. That's on the IRS level. On the state level, same things. Even some of the states here have even more strict guidelines as to if someone's an employee or contractor. And the same thing, they can reclass those payments. They can make you pay the late unemployment insurance costs, and then workers' comp can be involved as well, and there's penalties, et cetera. So Best case scenario, you want to make sure you confirm with a labor attorney. They are the best ones to make that determination if that person is supposed to be an employee or contractor. But you also just want to look at those guidelines. There's a 20-factor test out there. If you Google it, 20-factor IRS test, that kind of goes through some more detailed criteria of if a person is an employee or contractor. I'd encourage you to look at that, and also, check with your HR professional if you do have one of those as well. All right. A worst case scenario is that I've seen is that someone was a contractor, the relationship didn't work out, and they parted ways between the owner and the contractor. Then that contractor went to the state to file an unemployment insurance claim as if they were an employee, and then I opened up a whole investigation into the company to determine was that person an employee or contractor, and so on and so forth. So that's what could happen when those relationships go bad. All right, so I hope that helps. Stay tuned for your next tax tip, and also feel free to schedule your complimentary discovery call if we have not had a chance to speak or work together yet. Take care. Bye bye.